All right, good evening, good evening, good evening. So, on our next live stream series, having a late start, but you can see the title. We'll be focused on business credit card stacking in 2025, taking a look at what it's going to take to qualify for business credit cards in 2025, some of the top institutions and a variety of options that are available, strategies, timelines for stacking, as well as the value of why business credit cards are going to be useful for us in 2025 when it comes to advancing our businesses, as well as supporting our personal finances. That is the objective. So we got a lot to cover in this live stream. We're going to keep it clean. We're going to keep it as neat as possible as far as focusing on the topic. I'm probably going to focus more on questions towards the end. So as you guys come in on the live side of this, I will be letting you guys know to drop your comments in the chat, etc. But I'm probably going to be focused on the content itself and deal with the questions towards the end. For those of you catching the replay, you're going to get a lot of information in this. I'm going to try to cover as much as I can before I have to end this live stream due to timing. So I will be covering as much information as possible when it comes to where to go for business credit cards, why we need business credit cards. Credit cousin, I see you, my guy. Welcome in. Welcome in. It's a gift to see you, my guy. Thanks for coming in. So we'll be focusing on where to get these cards. We'll be focusing on, the variety of options, timelines, sequences for stacking the cards up. We'll be talking about doing this yourself versus paying companies to help you do it. We'll also be talking about qualifications, things to look out for, and again, what it might look like in 2025 specifically, with the shifting environment economically and politically that will be affecting how banks lend to us. So we're going to try to cover as much of this as we possibly can. As you guys come in, as always, I recommend and encourage you to let me know you're in the building. Leave a like, leave a comment, chat, etc. You know how to support these. But we're going to get right into it. So the use case with business credit cards, we've kind of touched on it off and on throughout the channel. PNR, my guy. What's up, my man? How you doing? How you doing? So we are focused on using business credit cards effectively to grow our businesses and to expand our personal finances. So business credit cards are going to be helping us with cash flow management, going to be helping us with effective bookkeeping. It's going to also be helping us with protecting our personal credit, doing a better job of separating us from our business as much as we possibly can. It's going to give us somewhat of a funding play. It's going to give us we're going to talk about that a little bit more, but it is going to be somewhat of a funding tool as well. You're also going to be getting better purchase protections. We know we get better rewards, higher bonuses, sign-on bonuses, etc. when we use business credit cards effectively. So there's a lot of value to be had with business credit cards. We will be discussing whether or not you can, is personal credit going to be sufficient to get you into credit card stacking with business credit cards? And we're going to be talking about the value or the impact of business credit in that as well. So we're also focused on 0% business credit cards in particular, not because the other ones aren't valuable, but again, we are intending to try to use this as a little bit of a funding play. And this is expanding this topic, this is going to be the premise of why so many companies and individual brokers have popped up out of nowhere in the last 5-7 years or so when it comes to business funding. It's very much been centered largely around getting you 0% business credit cards, because the threshold for business credit cards versus other funding methods like traditional loans, traditional lines of credit, SBA, etc., the threshold for business credit cards is much lower. You can get a lot of people structured properly to qualify for business credit cards at relative scale once you figure out the system, you figure out the underwriting. So needless to say, that means that you're able to take a product that really people can access on their own with a little bit of concentration and enough information and build a system out to turn it into a funding product because of the 0% component. So most people, most of us as business owners, unfortunately, take a long time, and many, unfortunately, don't make it at all when it comes to getting the qualifications necessary for decent sized business loans and lines of credit. The biggest component that most of us struggle with is having revenue and documented business activity. big documented cash flow, tax returns, balance sheets, etc. Business credit cards are the only lending product available that allows us to get in, sometimes get tens to potentially have stacked up hundreds of thousands of dollars without having to provide much or any of that documentation, or having to have a year, 2 year old business or active cash flow or revenue coming in on a business yet. So it's understandable why this product has become so attractive in such a short window of time. It's really understandable. If you're coming into the live new, please let me know you're in the building. Quick hello, like, comment, etc. And again, just trying to take notes and dive in. If y'all have questions, let me know. I'm probably going to try to focus on the content, as I said in the beginning. So that segues us into whether or not you should be focused on doing this yourself, or whether or not you should be looking to pay some of the companies that are out there marketing this, or the individual brokers that are out there marketing this. I'm going to say it's going to come down to your level of efficiency, your level of acumen as far as understanding this realm of business funding, business credit cards, and as far as stacking them. It's going to come down to your understanding. It's going to come down to your efficiency, your ability to organize yourself and put a system in place to do this yourself. I'm not going to sit here and lie to you and tell you that this is easy to do effectively, because it is not. Believe it or not, it is not. A lot of people, you will find content creators out there who will make it, and other professionals who will make it sound like it's something that can be easily done by yourself. I will be honest, and this is coming from somebody who's done business credit card and credit card stacking period successfully into the six figures, and somebody who's a business banker who you would typically be going to in these financial institutions to get these business credit cards. All of the, content creators that are like, oh, the business banker, relationship managers, etc., that you need to be secret at, you're looking at one. You're literally looking at one. So you're getting this information, you're getting the actual face of somebody who's doing this, who's on the other side of this for a living. Definitely, credit cousin. So my guy, big credit cousin, made it clear, you are my guy. That's fine. I see you. My support, my evil genius. So credit cousin is correct. Ultimately, the most effective way to learn how to do this for yourself is to go out there and get it active for yourself. That having been said, credit cousin, and you can let me know your perspective on this as well in the chat. There is an argument for these companies out here, the legitimate ones, that can help you get access to this if your situation requires speed. If your situation requires speed, then you getting started, not staying maybe with this, but you getting started with a company that is already got a system in place could be effective. There's some things to look out for with this. There's some things to look out for with this, because it can go bad. Unfortunately, not all of these companies are always the most ethical, as I've said about credit repair, and sometimes even when they are relatively ethical and legitimate, they'll still have their little low key shady practices that you have to be mindful of. Correct. Speed can definitely be dangerous, credit cousin, if you don't have the means to pay it back. So that's something we're going to get into a little bit later in the stream, because we need to continue to talk about use cases for business credit cards in the first place. So, and exit strategies. But that having been said, when you start thinking about paying an entity to do this, if you literally have a poor baseline, and I don't mean that in a demeaning way, but if you have a poor baseline on what it takes to qualify for business credit cards and do it at scale, creating your own sequences, knowing what banks to go to, how to establish yourself with those banks, how to set your entity up properly, et cetera, et cetera, et cetera. If you don't have that down, at least a reasonable baseline, then business credit card stacking will be very difficult for you. If you have a legitimate business opportunity, active business, something that is going to work, if it gets some capital injection behind it, if it has the right tools, then there's a potential argument for you to pay to have a company do this for you. I am not going to rule that out for everybody that may catch this content and everybody out there. I'm not going to rule that out. That having been said, I will say that I more than 50% agree with my guy, credit cousin, on this particular topic. It is ideal for you to go about doing this yourself, even if it takes longer, because you are going to look out for your best interest in the process. You may make some mistakes, you may bump your head, and the intent of this live stream is to be one pillar of a resource for you to go to minimize those mistakes. I'm going to try to cover as much as I can in this. But at the end of the day, the best route for you to make sure that you're doing this to the best of your ability with your long-term financial stability in mind is for you to do this yourself, as well as getting efficient at it. Like my guy credit cousin has said as well, I've interacted with these companies, or at least a couple of these legitimate companies that provide this service directly, and I've dealt with them from like a professional point of view, just to get insight, to learn more, etc. I also have literally stacked my own business credit cards and credit cards in general as well. You guys can tell from my content, those who are familiar, you can hear in my content that I know how to do this myself. You literally can hear it in my content. So you have to be mindful if you're going to go the route of paying these companies. And we're not going to stay on this part of the topic for very long, but I do need to address it because there's so much marketing out there. Many of these companies, they're getting paid by performance, even if it could potentially be against your better will. So what that basically means is if they have to inflate numbers, if they have to steer you in different industry classifications out of what you might really be functioning in, etc., in order to make it work, they might. So if you're doing a revenue projection of 50 or 60,000 for your business the first year or so, and they are looking at it saying, based on everything else, that's not really going to yield you much results, that's going to make it worthwhile, then they may try to find a way to steer or inflate those numbers to 75 or 100,000 or more, if they think that's what's going to make the difference. If you are functioning in an industry that is traditionally not been favored by many banks, or is not in favor right now in this economic cycle, and we're going to talk about that as well in a moment, because I can give you some insight on kind of what that looks like live, they will potentially try to steer you into another industry that they think is working. So as Credit Cousin is alluding to, I believe, you have to be mindful of how fast you're trying to move with this, your objectives, to protect yourself, not only in getting access to that capital successfully in the short term, but the position you're putting yourself in with these banks over time. Because if things don't start to add up over time, you could be putting yourself in a very bad position. If you don't have an exit strategy together, then that's 0%. And you don't have the acumen to know how to maneuver out of that 0% into other products that can help you push that debt down the line if you really need to. You don't have the ability to navigate this. You can end up in a very bad position very fast, because that same appeal of that 5 to 6 figures at 0% is the same utter destruction of 5 to 7 figures at compounded 20+%. So very important to make sure that there's a plan and strategy in place to ensure that you can get in, but you also can get out. So that having been said, I am not completely opposed to paying legitimate companies or potential brokers out there to help you with credit card stacking. That having been said, it is important for you to know where the incentive for these companies or individuals lie. Very important. If you were to work with me one-to-one and I was to help you with business credit card stacking, at this particular time, I'm going to be focused on helping you to line up your information and to position yourself and guide you through sequences and potential institutions that may be a best fit. Even though I have my certifications, licenses, and I have the infrastructure to do loan brokering and funding brokering, right now, that's not how I will be helping. It's going to be a flat fee for me to help structure your files, structure your information. Just to give you that hypothetical example, I am not going to give this information to you or take you on as a client to get paid from how much in funding you get or whatever the case may be, giving me more of an incentive to potentially steer off and do something or have you tweak or change something on your information that can end up hurting you somewhere down the line, if that makes sense. So it's important to understand the incentive of these companies. Many of them are commission incentive performance based. They need to get you approved and get you approved at a high enough level to get a percentage. And if they have to inflate numbers, tweak industries, move this around, push that to the side, a lot of them will. Now, getting into the nitty gritty about doing this on an individual basis for yourself is really what the most I want to cover in this live stream. Real quick, many thanks. Financial institutions will give you 10% of your annual revenue. So if you're projecting 100,000, you'll get a $10,000 credit card limit on the business side. So that's completely fair. There are exposure levels. There are, when it comes to your particular, not just the institution's total exposure level, but based on your financials, your credit, your projected revenues, a lot of institutions will be looking for a range based on what you have going on. 10% is a good example. It could be more than that. It could be less than that, depending on other metrics when you apply. So that's a good keynote, credit cousin. So doing this for yourself, stacking business credit cards, 0% business credit cards for yourself, that is ideal in most cases. I want to give you the information that will allow you to try to do this effectively on your own. You're going to likely be slower if you're newer to this strategy. You're going to probably be slower. You're probably going to get less funding than you would if you were, had somebody taking your hand and walking you through it. But that's okay, because we want you to sustain longer term. We don't want you to just fumble your way into some kind of or backdoor hack your way into some kind of funding and then burn yourself on the back end, whether that be the banking relationship, getting the car shut down, limits, etc., or just drowning in the debt. Whatever the case may be, that's not the goal. So the starting point we're going to go off of is understanding the vast opportunity available when it comes to business credit cards, especially 0% business credit cards. There are hundreds of them out there, literally hundreds of institutions. In some case, each of those institutions may have two options for 0% credit cards. There are hundreds. So that's going to be on the local, regional, and national level. There are a ton of financial institutions. The beauty of this process is you only need a few per year, a handful per year to make this work for yourself. Most of us, if we're honest, anywhere from 20, 30, 50, maybe up to $100,000 is plenty in spending limits on these cards to get us off the ground and operational. So the marketing and the mechanisms that are put out there to try to entice you to chase these crazy $150, $250, $300,000 in funding, I get it. Those numbers, I don't give a damn how you twist it. When it's something that looks like it's coming into you, can manipulate you into thinking that you have to chase that. When you stop and analyze your actual business, the expenses and the ramp up or the startup costs necessary for your business. If you're coming into the live stream new, I want you guys to leave a chat and just let me know you're in the building. Quick hello, and any immediate questions around business credit cards, 0% business credit cards, and funding. All right. An example of a DIY on both personal and business. Okay, you asking for one PNR, right? You want an example on getting approved for business credit cards at 0%? I'm going to assume you're asking. Let me know. So there are hundreds of options out there. Okay, that means that in many cases, you just need to get this right once or twice a quarter, basically. Get the foundation together, which we're going to cover shortly. Get it right. And then from that point, exercise it at most 2 to 3 times every 3 to 4 months. And if you do it right, even if it's just $5,000 to $10,000 per card, if you add that up to 2 to 3 of those every 3 to 4 months, again, that's $10,000 to $15,000 per quarter. And that's, $40,000, $60,000, $75,000 in a year. Now, I'm not limiting anybody. If you have bigger ambitions, then take the information you're about to get and go to the next level with it. But the majority of us, if we're honest, do not need, $100,000+, especially in the form of business credit cards. My guy, Credit Cousin, already dropping institutions down, gems down there in the comment section. You got FMBO down there. So we're going to take a look. I'm probably going to screen share with y'all in a second. We'll just take a look at some of the high-ranking, largely national institutions, but there are tons of them down there. Yes, yes, P&R. He did the. You saying you did the research and the legwork yourself? 100%. So we know that there's hundreds of institutions out there, local, regional, and national. We're gonna start there for a second. There's a value to having a variety with these different institutions. What I mean by that variety is if you're looking to stack with these different banks, then you're going to need to sequence and you're going to need to be mindful about the different institutions you're going with. One of the most popular methodologies you will hear on the internet on this topic is to go bureau by bureau, which is very effective. There's a reason that that has stuck so much. It is very effective. If you can get one or two institutions on TransUnion, one or two or three on Experian, one or two or three on Equifax, and apply from a vertical point of view or horizontal rather, then that's ideal. That is ideal. That basically means that in most cases, not all, but in most cases, institutions are going to pull one at a time. And so if they're only seeing one inquiry or two inquiries, and you're doing that across bureaus, you potentially can get your hands, if stacked properly, on 4, 6, or more credit cards at one time in one go because you went across horizontally to bureau to bureau. That's a popular method that you will hear out there. So it is helpful to know where those institutions you want to apply for are pulling from. That's not the hardest thing in the world to find. It's not the hardest thing in the world to find. But you also could just build a relationship with that institution, which we're going to also talk about in a minute, and get that information directly from that institution, or at least get an idea from that institution. They're not always going to be straightforward. It depends. But in many cases, it's possible. They'll give you an idea where. So it is very important for you to understand that you want to be careful where they're underwriting. Very careful. You want to try to find as many institutions that are underwriting for themselves, whether that's local, regional, or national. There are going to be these really large conglomerates. Elon Financial is a really good one that everybody in this space talks about and knows about. That does bulk underwriting for a bunch of small and regional banks around the country, like thousands of them. So if you're not aware and you end up applying what you think is different institutions, and then you find out, oh, actually, Elon is underwriting all three or four of these institutions that I'm trying to apply for. And you find out the hard way because you're you're applying from the same bucket. You're always looking to avoid looking desperate for capital. You're always looking to avoid in this strategy of business credit card stacking, personal credit card stacking. The main thing with protecting with inquiries and the hype around avoiding inquiries or at least staggering them out is to avoid banks thinking that you are fraud or you're desperate for capital, whatever the case may be. That is why there's so much emphasis around bureau by bureau, knowing where they pull from, etc. Okay. So hundreds of options, layering out local, regional, and national institutions that underwrite ideally for themselves and pull from different bureaus. That is the first foundation to your sequence setting for business credit card funding, 0% business credit card funding. Knowing the institutions that are available for you, and knowing where they pull from, understanding the size of the bank, etc. That is ideal. Once you narrow that framework down, you want to understand your personal foundation with your underwriting, like as in your application. So that basically means in translation, you want to have a good baseline that almost any bank is going to want to approve when it comes to your credit, when it comes to your personal income and finances and stability, when it comes to actual or projected business revenues, when it comes to the setup and formation of your business, all of these different components that are going to go into your application for your business credit card. You want to make sure that you have a healthy foundation that the vast majority of institutions will look at and want to approve. So that threshold going into 2025, we're going to set that bar. Historically, normally around a 680 credit score has been enough to get the job done. It may still be, but that is the bottom level floor with business credit cards for most institutions. honestly, in the economic cycle that we're in, I would make the argument that we're going to talk about that one too. That's a good one, cousin. Credit cousin, incorporated in multiple states. That is a powerful one because you want access to more local and regional institutions. So that's a big one. You want to make sure that you are not going into these financial institutions threading the needle. Okay. So that basically means that if a 680 or even a 700 was that minimum threshold that got you in the door or could have gotten you in the door, ideally, you want to be somewhere north of 720 on your FICO scores. Ideally, you want to be somewhere north of 720 on your FICO scores. That keeps increasing over time because the economic environment we're in is becoming more and more turbulent. Interest rates are now adjusting again. They're going to keep adjusting, which typically makes banks appetite, pick up for lending and borrowing starts to pick up. But it does also indicate that there's potential instability in our economic system. Because if you think about it, interest rates would stay flat if the Federal Reserve felt as if the economy could sustain it. There's no reason to really pull interest rates down and stimulate the economy if the economy is healthy and you think it's going to stay healthy. That's how this whole interest rate game works for the Federal Reserve. So even though they're saying meeting after meeting that everything looks great, they're just doing it to be precautious. That don't really add up to the fact that if the economy was as strong as y'all keep swearing it is, that you would continue to bring interest rates going from jacking them up 2 years in a row to 20 plus year highs to a projection by their own admission of 2.5 years of rate cuts nonstop, pretty much. So that having been said, there's instability or potential instability in our economic system that does leave banks a little leery. A 720 plus is going to be a really good range for you to focus on being on your FICO scores across all three bureaus, ideally. So that is a good starting point for you. The next thing you're going to want to make sure is that you have a good, stable gross annual income. Good and stable. Two very important adjectives that I'm using to describe your income. Good is going to be whatever is relative to your industry and your location and your DTI. So I don't want you to think that good means everybody has to make over six figures, because you don't. You don't. But you can't have the equivalent of $25,000, $30,000 a year in monthly expenses on your credit report and make $40,000, $45,000 a year and think you're going to get approved for business credit cards. You're not. And if you do, the limits are going to be like this. So you need to focus on a good income, which again, your industry, what type of work you do, your location, because if you are in some small town in Mississippi when you apply and you make $40,000, $50,000 a year, you might be big shit where you come from. If you make $40,000, $50,000 a year in New York, or if you make $40,000, $50,000 a year somewhere on the wrong part of the West Coast, I'm pretty sure you're homeless. So it is important to make sure that you're making a good income based on your industry, your location, and then your DTI, debt to income ratio. That basically means if I have $2,000 a month in mortgage, car note, credit card, student loans, installment loan, whatever, then I need to have a really good gross income over top of those monthly expenses on my credit report. I've observed that somewhere around 30% should be your ceiling of a good place on DTI. That has been my internal, as a banker, observation, as well as on the other end as somebody applying. So just to give you a baseline of where your DTI should be, 30% is around a good place to a high place. So you basically want to be very mindful of good income in that capacity. Stable is going to be having that income as long as possible, historically speaking. When you do credit card apps, typically this doesn't get verified, but it just helps to have that. Why? Because banks are very clever. They will cross-reference other things in your background check and in your application that will add up to whether or not you've been making the money you say you've been making for a while. So if they look on your credit report and don't see the type of borrowing or financial activity that would indicate your income, that's going to be a red flag for them. If they do a background check, if they check your zip code where you live, there's different things they're going to look at. Some things we don't even know about. that we wouldn't even think about probably, that they're going to use to say, well, if you made this much money, then how come you have this going on? Or how come you don't have this by now? And so you have to be mindful of that. Okay. So 720 and above, quality credit score. Uh, Shout out on the gold and silver credit, cousin, because I see you down there talking about that. I'm gonna put some pictures. I'm gonna start putting some pictures up on these community posts. I definitely been stacking too, but we're gonna talk about that at another time. So 720 plus FICO scores, good income relative to industry, location, and DTI. That's an income ratio. Hopefully, y'all caught that. From that point, now once your personal finances, your personal identity is set up really well, you want to make sure whatever business entity you're going to be applying under, typically the better results are going to be under LLCs and corporations. Sole proprietorships can work, but I shot a video sometime in the past where I really elaborated on this. And I'm telling you from firsthand experience, I've I've done credit card stacking under sole proprietorship and under an LLC, active LLC, and I'm also a business banker who takes these applications. Again, so I'm telling you, sole proprietorships are just not looked at the same for banks. They just literally don't see the ideal scenario with banks lending. Period is that there's growth, especially on a revolving product. Because again, credit cards are really spending tools. So they're really looking for your financials to grow, your spending to grow with it. That's how they're going to make more money. When you're a sole proprietorship, in their eyes, they immediately see limited capacity. They're thinking about gig workers, freelancers, not that they don't do well, but that typically is going to be something that isn't going to be a scenario where you're hiring employees, you know, running this major operation or potentially reasonable size operation, six, potentially seven-figure operation. Banks are looking for that when they think about business owners. Yes, there's a ton of mom and pops that are in the five-figure range of their operation. But in the reality of things, even small businesses that are really active and legitimate are doing really upper five to six figures in business. Even if it's solopreneurs or like couples, most businesses are operating in the upper fives to low six figures at the ground floor. When the sole proprietorship comes into play, that I'm sure the banks are just looking at that like, so you can get approved. It's cool, but it's really not gonna allow you to grow limit wise like you could and excess wise like you could. LLCs, corporations are ideal. These are the type of entity structures that banks are traditionally used to seeing do real business at relatively high levels or progressively high levels. That out of the way, you want to make sure it is structured properly. Good fitting name. So think about a name that typically doesn't have the industry included in it. Think about a name that is relatively simple and straightforward. And from that point, you also want to pick you don't want to pick an industry because you're legitimately functioning ideally. So whatever industry you're in, you want to be mindful of the way banks might be looking at it. And you want to try to, there's subcategories within your industries when you're picking your next code, North American Industry Classification System code. When you're doing that, you can say real estate. And somebody might say, oh, real estate is one of those risky industries that banks don't like to lend to. It depends. It depends. Are you a house flipper or are you a property manager? That's not the same thing. Banks are not looking at that the same. You can say I'm in transportation. Banks might not be, comfortable with that at the time, but they might turn around and say you're in logistics. That might come out different. So you're not lying. You're not even fudging. But what you're doing is trying to play a game of how close is the industry I'm functioning in from a subcategory point of view. How close to something that banks are more comfortable with can I fall into? Hopefully that makes sense to you. So good entity structure, picking the right entity, good entity setup, good name, good next code, work out your projected revenues, legitimately think about what you could be earning based on, what industry you're in, what business you have going on. You need to think about, okay, what's a realistic projected revenue? Maybe you've already been functioning in the business as an individual. Account for that. Maybe this is a completely brand new business and a brand new idea, and you're just going off of what you believe and you've calculated and you've seen that can be had. Do your best to have reasonable projected revenues based on the industry. So this is another scenario. You say you are, I don't know. Let's just say you're a lawn care. You're in lawn care, whatever, and you're in lawn care in somewhere in the sticks in Alabama somewhere. Okay, the banks are going to be mindful if you turn around and say that you all your applications together and you don't have any employees on there, by the way, you just putting down it is just you. In some kind of way, you're putting down that you have a $250,000 projected revenue as an individual lawn care person. The bank is going to be looking and narrowing down lawn care business data on lawn care businesses in Alabama and in a region closest to you. And they're going to be comparing those different lawn care businesses as the data that they have and looking, trying to say, what lawns are you going to be cutting to get $250,000 a year by yourself? So be mindful. Be mindful. Don't just try to put those big fancy numbers in there because you think it's going to work out for your limits. Be mindful. Did you know Costco is selling gold bars in store and you spend 100 pay tax? No, credit cousin. I'm a avid Costco shopper. I had no idea about that. You put me on now. I'm gonna have to check that out. I had no idea about them selling that. So be mindful when you're doing projected revenues for your business that it's realistic as possible. You also have to keep in mind at some point, you're going to have to start showing activity that's going to match and make sense for the projected revenue. So you got to be mindful of that as well, because you could be putting some big shoes to fill if you have a slow start where you don't make any money or you make next to no money. Got to be mindful of that. Please keep that in mind when you're doing this projected revenue thing. If anybody, I see there's some people coming in, y'all just give a quick shout out down below and let me know who you are. You're in the building so I can give you a shout out. And then, of course, you feel free to drop any questions down below. So, projected revenues. The next thing you're going to want to do is consider the address of your business, contact information of your business. Do you need a website, domain name? All of that is helpful. Not always a deal breaker, but it is helpful not to have your home address, helpful not to have your personal cell phone number, helpful to have a legitimate full domain and business email. Not necessarily mandatory, but will increase your approval odds and could increase your limits and the outlook of you in the bank's eyes when they cross-reference your information, especially these regional to national banks that have the infrastructure to do this technologically versus some of these smaller banks that are just mostly leaning on, you know, less advanced forms of background checks and application checks. So be mindful of the infrastructure of your business. Okay. So, real quick recap: 720 plus FICO scores, good stable income, uh, having a good entity structure, picking a good entity, having a good entity structure. LLC corporation is ideal. Sole proprietorship can work. Does usually the ceiling is lower. LLC corporation, picking a good industry that fits what you're legitimately doing. Transactions are going to match up on that. And then trying to find the subcategory that banks will be more comfortable with working with, and be mindful of the financial institutions that you're doing business with, because some of them are just not comfortable with certain industries as that institution. So this is what the next stage that I'm about to go into with this is important, which is relationship banking. But you want to cover the infrastructure of your business: business address, business phone number, business email, good NAICS code that fits, and good projected, healthy projected revenues. You obviously want it to be as high in your favor, as high as possible. But keep in mind, don't do anything unrealistic and shoot yourself in the foot down the line. Okay. And you're not married to your NAICS code either. That's something that doesn't get talked about enough either. You don't want to change it every month, but your business can pivot. So keep that in mind. Your business can pivot. So keep that in mind with your NAICS code. Next, relationship banking. This is where everything I just gave you gets an amplifier, in the sense of going into these banks and increasing and having all of that other stuff I just laid out, correct? But then increasing their comfortability with you by banking with them for a little while. And that can be as short as 90 days or so, 60, 90 days, 120 days. This strategy is slower, but it yields much better results. Much better results. What do I mean by relationship banking for business credit card stacking? You can go into these financial institutions with the right FICO scores, decent income, and a decently structured business cold, and usually get approved for business credit cards. Totally possible. Banks will be much more skittish of you. You are very likely going to get single digit limits or low five-figure digits limits. So like 10, 11, 12. When you go that route, if you even have good enough comparable credit and other financials to get that high, many times you're going to get that $3,000, $4,000, $5,000 limit to start. If you go in cold with even if you got 760 plus credit, six figures in income, whatever, you could potentially end up with that $5, $10, $12,000 start. Same financial metrics, 720 plus, 750, 760 plus, really good income, great DTI, good stability, background checks out good, business, you got a nice little LLC set up, all the dots, your I's dotted, T's crossed, etc. Bank with that institution, whether that be a business checking account, even on a personal side, meaning you don't have a business checking account established or a business product, business savings established, but you have a good personal relationship with that financial institution. Most of your business is going to be most of your business application information is going to really be sitting on top of your personal info anyway. So your personal banking relationship could be a good relationship banking metric to help ease the comfortability of these banks. 60, 90, 120, 180 days, if you're going in and setting up savings accounts with decent balances, checking accounts with decent activity and balances, and don't ask them for a dime as far as borrowing. Even if you're pre-approved, if they let you know that there's an offer available, just chill out for 2, 3 months, 6 months. Let that simmer. I have banks that I have savings accounts and checking accounts with that I didn't set a few $100 or $1,000 in, literally for a year and a half, 2 years. Literally, I'm overdoing it. I don't want you to think you got to go that far, but because just haven't gotten to those institutions yet. But I'm working time in my favor because my data and information is well into that bank. And keep this in mind real quick with relationship banking. When you think about the kind of balances you need to make this work, the statistic has been out for years. Most Americans can't come up with $1,000 to $2,000 for an emergency right now in cash. Most Americans, and I mean or at least a large percentage. I'm not going to say most because I'm not quoting that statistics exactly at the moment. But it's somewhere north, I believe, of 40% of Americans cannot, that's tens of millions of Americans, by the way, in case you want perspective, cannot come up with $1,000 to $2,000 in an emergency in cash. So with relationship banking, trust me when I tell you $500 or $1,000 can go a long way sitting in a bank. Because if you think about it, you're sitting $500 to $1,000 in a bank and not needing to touch it for months. I'm doing it with some institutions for a couple years now. It's not a lot of money, but there's a lot of people that can't sit $500 to the side and go out of sight, out of mind, or $1,000 to the side and go out of sight, out of mind. So you don't need to have a ton of money for this to work. Now there's bank ratings and bank levels to your deposits. Obviously, the more you put in, the better you look. If you can smack 10, 20, 30, $40,000 and sit it in a business bank account or a personal banking relationship, go for it. It looks way better. But I do want you to understand that $500, $700,000 can go a long way in a financial institution if you don't need to touch it. Ricardo, my man, I was looking for you. Good to see you, my guy. I was looking for you. So don't think you need to have tens and hundreds of thousands of dollars for this to work, because you don't. If you have, $3,000 that you can spread out over 3 to 5 institutions, 3 to 6 institutions at $500 to $1,000 a piece, trust me, you're making headway. You're getting your information into that financial institution, especially the regional to national ones that can be soft running your data. They running background checks. They soft pulling credit. All of these different components. This is going to be, appreciate y'all showing the likes and the hearts and the emojis. Appreciate y'all showing y'all support. So That money and your banking data being in those institutions and not doing anything crazy or hasty when you get in an era where banks are getting mutilated with fraud. Y'all have saw that Chase situation going down a few weeks ago. Chaos, pure chaos. These geniuses are running around here talking about they hacking the bank and they hacking Chase by taking money out of their own accounts illegitimately. This stuff is going down at a rapid pace. So you walking into the bank, meeting a banker, sitting down face to face, 2 forms or more of ID, $500, $1,000, sitting in a savings account, don't need it for a little while, short-term CD, just want to get to know y'all, just want to kind of set the foundation, looking for new institutions to branch out with. And I just want to start small, but and learn, sit with that banker and learn more about that institution from the inside, build a rapport, come in every now and then and drop a few dollars in just to show your face. And that bank is seeing this trail of activity for months, ideally, if you're patient. I promise you that 3,000, 5,000, 7,000, 10,000 limit start. If you got all those other metrics I laid out a little bit earlier set up properly, I assure you, you're likely going to get 50% to double that when you go to apply for that business credit card. I'm telling you right now, from somebody who's done it as a borrower and somebody who's done it at taking it as a business, as a banker. Okay. When you plant the seeds of these relationships and you're patient for 3 to 6 months, put a few $100 to $1,000 in, show your face, present IDs, use their online products, engage with them. I promise you, these banks are going to appreciate you because you are literally in a niche bucket by the time they pull your application. All right, they've been banking with us a few months. They've only put money in. They didn't ask for any money. They didn't do any crazy transactional activity that looks suspicious. All of their information checks out. They got good credit. They got a good DTI, etc. They are looking for you. Right now, they are looking for you because there's so many people. Credit card debt is over $1 trillion for the first time in this country. Default loans, I just covered this in a video that either has been out or will be coming out. Default ratios are through the roof right now with these auto loans and credit cards. It's bad. So if you can just stabilize a few $100 to $1,000, which most people don't even have for an expense in this country, or at least a large chunk don't, you're not doing suspicious activity and you got decent credit, good DTI, your business looks polished, even if it's brand new, it looks good. I assure you, you're going to get some much better early reception from these businesses, these banks when it comes to your business funding. And another one that is important before I answer this question I see down here is going to be comparable credit. My guy, Credit Cousin, that was one of the favorite topics that he talked about when I first was catching his channel. Comparable credit is very important with business credit cards. What does that mean? You have equivalent products, personal credit cards being the best example, that they can compare your management of that financial tool to lend on the business side to you. So that means if you've got 10, 15, $20,000 personal credit card limits, maybe 2 to 3 of them or more that you've had for a year, 2 or 3 or more, the longer the better, the more those cards, the better. The bank can look and say this person's managed this product effectively, good standing. From what we can see on our data points, we're willing to lend somewhere at or potentially above that to this individual, all off of your good personal credit history and your good personal credit card usage. This is why I shoot so many videos around personal credit cards. For one, the variety of different, financial bases they can benefit you that I always talk about. But when you start talking about building out your business, credit cards are one of the biggest financial tools that financial institutions, banks, and credit unions use to gauge your management of debt and cash management and cash flow management. So comparable credit is very important, extremely useful. So keep that in mind. If you're looking to, while you're waiting 3 to 6 months to get into those institutions in 2025 you're interested in, which means you got to start that process now if you want funding, and cash flow management tools like business credit cards in the first quarter of 2025. You need to start planting those seeds in September, October. You need to make sure that you're getting good credit limit increases and maybe even 1 or 2 new personal credit cards that are at good limits to make the business credit card limits more attractive for yourself. Comparable credit is very important. So we got a question real quick. My guy, Get Protected. Hey there, Get Protected here. Question: if you compare a contract 2008 versus 2025, will the banks and other financial institutions fund small business, even if they stop lending on the personal side? Feedback. So yeah, Get Protected. In 2008, we had a totally different economic set of circumstances going on versus what we have going on now. And that's good and good and bad ways. We don't have a single point of collapse like we had in 2008 that put a lot of banks under strain because a huge part of their books was falling apart with people defaulting on mortgages left and right. And a lot of banks that were caught up in that couldn't afford to function normally because they were taking such heavy losses with their biggest lending category, which is mortgages for most financial institutions that participate there. Right now, the economic cycle we have right now is where banks are compressed from higher interest rates, and you have an environment where interest rates are fluctuating in the sense of speaking, meaning we just jacked up for 2 years. Now we're on our way to cranking down. And then we have a scenario where we have a lot of fraud from the consumer and business level that banks are combating. We have a lot of economic instability of how healthy is the economy really. And then you have these banks that are dealing with a lot of consumers who are defaulting on a lot of their consumer debt and businesses, but consumers are really bad right now. Auto loans and credit cards in particular, that is shooting through the roof, and a lot of banks are exposed to that. So it's not a situation where there's a single point of contingency like in 2008 that caused the economic calamity that we experience. In 2025, it's more of an uncertainty environment, if that makes sense. Get Protected. It's much more of an uncertainty environment where banks are like, I don't know. I have to be much more precautious on who I'm lending and doing banking and lending to and with. They have to be much more cognizant than they may have had to been pre-COVID, for instance. So with so many losses from fraud, so many legitimate losses from people who can't afford their debt anymore, the economic environment where interest rates are too high for banks based on the environment they built their business model around in the last 10 years or so. Rates are not historically high compared to decades in the past. Like, I mean, 4, 5, 6, 7 decades. Rates are not that bad. But after 2008, we had a situation where we had a over 10-year stretch where rates were near zero. And then at 2020, they were actually damn near at zero. So banks have built their business models around that. That is a favorable lending environment. Easy money, easy flow of money. Banks have had to turn right around and deal with the highest interest rates in over 2 decades out of the blue when inflation spiked and the Federal Reserve had to take action. So we're in a scenario right now, Get Protected, to just kind of wrap up your question, answering your question. Banks are going to be still needing to lend to continue to function. What we're dealing with in 2025 is going to be a lot more verification, a lot more pending applications, a lot more supply me more IDs, supply me more documentation, a lot more show me than we've had to deal with pre-COVID, maybe even early 2020, 2021. Since that time, 2022, if you want to call it, things have changed. So we have to position ourselves, and this is why the topic that I was on, right in your question, relationship banking, is so powerful, because you're literally easing the bank's nerves. You come in before you ask them for money and put them at a potential risk. And again, if you got all your other parameters on your applications checked out, I'm glad I answered your question, Get Protected. If you got everything checked out, then they'll still probably approve you because they're looking for you, but they're going to be a hell of a lot more skittish if they don't have something else to go off of to show that you're legitimate. A stable 3 to 6 months of banking activity, even if mild, can go so far because a lot of fraud happens immediately. A lot of fraud happens immediately. Most people who do fraud do not bank for months on end with institutions before they conduct it. They don't. They almost go straight in committing fraud. Most people go straight in committing fraud. So when you show 3 to 6 months or more of good, stable banking habits, and again, that could just be opening a savings account or a CD and dropping $500 to $1,000 in it. Nothing crazy. I do it all the time. And banks appreciate you. You're not gonna be that big ticket person walking in the door that they're gonna roll a red carpet out for. But when it's time to borrow, you're familiar. I ran the story with American Express to you guys on my channel, as far as other videos a few times. I literally did a high yield savings account with American Express like in 2020. I didn't apply for a credit card with them until 2023. I banked with them for over 3 years before I asked for a credit card. I have multiple institutions local to me and regional, and I plan on setting up more before this year is out that I've been with for over 2 years. I have to go put money in it to keep the account from going dormant. So relationship banking is very powerful. You want to be patient. My guy credit cousin was alluding to that earlier about the speed thing. You want to be patient if you want this to come out the best. So again, if you want a situation where I only need to apply for 2 business credit cards every 3 to 4 months because I'm getting $15,000 and $20,000 in credit limits per card, that's plenty enough to ramp up, start up, or feed a lot of businesses as far as short-term funding option and cash flow management. It's plenty enough money when you got 15, 20, 30, 40, $50,000 every 3 to 4 months, brand new at 0%. If you can't make something shake in on that situation in a reasonable amount of time, then you need to reevaluate your situation, especially if you can't sustain it on the back end as far as making those payments somewhere down the line or have a exit strategy to get out. So great structured personal information, solid business structure and setup, great relationship banking. If you got some excess capital, which I advise and hope all of you do if you're starting a business, please don't start a business broke. Have enough excess capital to plant seeds with these different banks. And to finish that topic off or to go further, my guy credit cousin brought up another one that I enjoyed. Having your entity domiciled in multiple states. And I'm kind of thinking the terminology for it. And credit cousin, help me out if you're still in there. And I know there's a terminology for it. I'm drawing a blank. But basically having your entity domiciled in different states. So you register as, kind of like an alien or a foreign entity filing in different states with your LLC or corporation and do relationship banking in different states and markets because Truist, PNC, these really good regional banks are not all over the country. I am geo-restricted from Truist. I got PNC going, but I don't have Truist in my backyard. I'd have to set up in Tennessee, Florida, or something like that to get to Truist. So you want to set up in different states. If you're patient, and my guy get protected, it's like I definitely need more patience. I thought foreign entity filing was being shut down by banks. No. Not really. And you'd have to show me some, and I'm not telling you that to fact check you. I'm just saying you have to show me something in case I don't know. Key Bank is a good one, get protected. Key Bank is another good one. Yes, they are limited by geography. BMO Harris is a decent one. That is also in certain parts of the country, not all over. I don't have them access here in Louisiana. So yes, no, I haven't heard anything about banks shutting that down. They're definitely going to be mindful. I'm sure they're probably taking high levels of precaution because again, look at the internet, y'all. Look at the wild, wild west of the internet. I'm not trying to brag, but I am one of the up and coming, but I'm still one of the most ethical finance creators you're going to catch on YouTube. Look at all of the channels that are trying to get you to run all of these plays, backdoor hacks and strategies to get into these banks illegitimately and basically pillage them for funding and run off. Or at least put yourself in a position where you get all that funding and you can't do anything with it and you set a bad precedence with that institution. So there's a lot of, on social media, YouTube, all these different creators that are putting this information out that are structuring people out for illegitimate practices. So of course, these banks are going to be leery of foreign entity filing because there's so many people doing these, catching these YouTube videos, getting this information and then using it for the wrong reasons. And they're doing these foreign entity filings and taking this priceless information that these content creators are putting out on what bureau, how to get in with them, blah, 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 running up these fake numbers and patching together these applications and getting funding and running off. So if you're seeing anything that's showing indications of banks slowing down or getting leery on, foreign entity filings, etc., that's why. It's a huge reason why, at least. There's so much fraud and so much bad banking practice by so many desperate people. So we are not in that bunch. My pioneers are not in that bunch. We are not doing this to sneak into these banks illegitimately, trick them into some funding, and then take off on them, because we never really had a plan or a real business to start trying to pay them. We are the ones that are building legitimate businesses, legitimate finances, and reinvesting back in our businesses, growing our communities, contributing to the economy. We are building real legacies, real businesses, acquiring assets, and we're growing for real. So that is why I put content out the way I do. I'm going to touch on and talk about all these hacks and strategies as they come along, because a lot of it needs to be dispelled. Some of it works legitimately. It just needs the proper context versus the way it gets put out there. So I haven't heard anything about the foreign entity filing thing, but I'm working for a financial institution. I have colleagues at other ones. I haven't heard anything about it, but I'm sure that there's crackdowns going on. I'm sure of it. So again, working through different regions makes a lot of sense. Be strategic, be ethical, have your documents together. I recommend, when I travel, go to my institutions. I don't have Bank of America in my state. I went to Dallas earlier this year. Guess where I went? Physically into a Bank of America. I haven't been to PNC yet, but I plan to go physically in there. There's several other institutions that I'm going to physically go in and make relationships in other states in person with IDs as a legitimate person, because I want that data showing up in the database for that institution when I go for funding later on. I don't want to be this anonymous online individual. Even though the banks allow us to bank that way, they want those relationships. It is so much better when you can show a footprint of going into a legitimate branch and showing face, showing ID, conducting business. It helps. Relationship banking is a major factor that helps. So, that having been said, rounding this out, very important that we also understand why it is important to know how to use these funding strategies and how to get an exit plan together. This is very important. We do all of this to get into this funding, and all of us, myself included, run into timeline delays. Revenue doesn't come as fast as you think or the way you think it's going to come in. Anything that comes along and delays the plan that you had in place to put that revenue to work and get back what you were looking to get back when you invest in your business. Some of mine has been deployed towards my business and content creation, putting a team together, and building out the content so higher quality for y'all to enjoy. I've in the past used some cash flow management and stretch cash flow for a few months to get that off the ground. So that is not something, with content creation, anybody can speak. It ain't a guarantee how much and when you're going to get revenue back off of that in any case. So you have to be prepared to have an exit strategy to survive. So what that basically means is you either have the personal or business revenue from somewhere else to cover these expenses. You have a plan to elevate yourself to grow with other institutions so you can get access to more 0% cards and do a balance transfer game as you figuring this out, which is really great. You have to have some kind of exit strategy in place. Maybe you got a backup plan where it's like, if it gets bad enough and I can't get this figured out fast enough, I have the ability to take, to take a little equity out of my home if I need to, or something like that, and pay off these credit cards if I have to. You gotta have an exit plan in place. You got the ability to go out and get a second job and afford the payments on those credit cards until you figure it out. You gotta have an exit plan. Your business will not always work out clean and revenue comes in perfect, comes in at the level you thought it was or beyond, and you just rolling in the dough, etc. Yeah, 6 months, 12 months, 18 months at 0% sounds great until that time is gone. And you're looking at 20 plus compound interest on business credit cards at 5 figures a piece. Gotta be mindful. Have an exit plan in place. This is why you want to plant the seeds for relationship banking at other institutions early. If I did 3 to 6 business credit cards at a certain time frame in 2025, and the timeline for the 0% is on its way out, and I haven't gotten back the revenue that I was intending to pay all of that off or pay it down well, I need to have already preseason relationships with other banks that I can get access to 0% funding with little to no resistance and roll those balances over and keep the game going. Very important. And this means you got to have good personal finances to afford the cash flow relationship banking, like being able to drop hundreds of dollars or $1,000 or more dollars in these different institutions and plant those seeds. The ability to sustain the minimum payments on your cards. You got to have good personal infrastructure in place while you're putting your business together. Stephen Shelton, you're new to me, Ohio. Welcome in. Welcome in. I know you I don't know if you've been here the whole time. You're coming in later or not. But hopefully, if you caught a lot of the content, if not, let me know if you got any questions. But welcome in. Good to see you. My guy, PNR Connected. I'm at the stage of letting my business age for 2 years with projected income. How do I build for that? So when you say letting it build for 2 years, as in you want it to age out, I'm sure you want to reach a 2-year mark. When you talk about for 2 years with projecting income on so clarify for me real quick, PNR, when you say like the projecting income and how do you build for that? Like, can you give me a little bit more insight on your question on that so I can make sure I answer you appropriately? So just wrapping this up, we want to know all of our total options, and I'm going to see if I can play around with a screen share just to quickly here we go, show y'all what so I just have Nerd Wallet up. This is a really short list. Hopefully y'all can see this, but this is just a really short list of September's hottest cards based on Nerd Wallet. So you can see you got Chase Bank, which has 2 ain't cards at 0%. US Bank has a 0% for 12 months. American Express has 2. I have both of those at 0% for 12 months apiece. You see that second Chase Ain't card. Bank of America has 2 at 0%. I'm banking with Bank of America. They're one of my next plays for business credit cards in the next 3 to 6 months. They are definitely the top of my list. Amex also has 0% going on their charge called the Business Gold, which honestly is a little new to me. So here's just a few quick hitters showing you how many options. This is just 3 or 4 major institutions that have this available, that have 2 to 3 options a piece for business credit cards. So the options are plentiful. As I said earlier, national, regional, and local options. Ideally, banks that underwrite for themselves. I have cards with Elon, or that are not Elon Financial because they're an underwriter, but I have cards that were underwritten by Elon. It's cool. So I'm not telling you to avoid it, but you have to be mindful if you're applying for multiple institutions that are all trying to use Elon for underwriting. Okay, so that's very important for y'all to understand. You want to stagger out the size of the institutions, the bureaus they're pulling from, and you want to understand if they're underwriting for themselves. That is important. A last important one that can be really helpful to understand is going to be double dipping. Can you get more than one lending product from that institution while you're in there? Very important. That is a valuable one. If I can get a business and a personal credit card, or business and an auto loan, business credit card and auto loan, whatever they allow me to qualify for while I'm already in there. Very important to keep in mind. My guy said no revenue. PNR said no revenue projected income. How do I build off of that? When you say build off of that, you mean like as in stacking business credit cards? I just want to make sure I'm clarifying. I'm not trying to give you a hard time. But are you saying stack using that projected income to stack business credit cards and qualify for business credit cards? Let me know if that's kind of what you're asking. So while I have you guys in, I also want to let you know I've pinned to the very top of the chat an opportunity for you to actually invest directly in the channel and actually get a return on your investment. So I will be rolling this campaign out, this fundraising campaign out for probably the rest of 2024, and then maybe closing the door on it. So it's not going to be an unlimited opportunity. But this is something that you probably haven't even seen on YouTube, or you've seen very little of, where I'm working with a platform that is sponsoring me basically to run a fundraising opportunity with you as my viewers and my subscribers, where you can basically invest directly into my channel. And as the channel grows, I share back in the revenue with you. Phenomenal opportunity. Phenomenal. It's crazy. I'm excited to bring it to you. And I want you guys to check the link out pinned to the top of the chat. There's a landing page where you can fill out a very, very quick form and show your interest level on what you'd be willing to invest, and just your basic email information, so we can compile this data and launch this fundraising campaign all the way out. So please, every single one of you, go to the top of the chat. It's literally that quick. For you to go to the top of the chat, it brings you to my landing page. It will explain the opportunity to you and allow you to express your interest, so I can pull the campaign together and we can share in the revenue growth of this channel together. Phenomenal opportunity. So I want you to go to the top of the chat and check that out, and let me know if you have any questions while we're on. Can you stack business credit cards with credit unions? Yes, Stephen Shelton, you absolutely can. But give me a second. My guy P&R, I'm going to answer your question real quick. So projected revenue works fine for banks with business credit card stacking. It works fine. You can do it for a pretty reasonable amount of time, because it is relatively understood that businesses don't always get things off the ground with their revenues immediately, their sales and revenue immediately. Some people, some of us, a lot of us struggle. You can run off a projected revenue for a good period of time. It's not something you can do forever. Please keep that in mind. You want to legitimately be working towards getting actively off the ground with your business. That having been said, literally, I have an LLC. I've literally done business credit card stacking with, that does not have actual revenue yet. I have actual money flowing through it from personal and other business activity, but it has not actually gotten off the ground yet. And I've literally already started that process of credit card stacking with it. So it is absolutely doable, PNR. You basically, again, I kind of talked about it earlier. You just want to make sure your projected revenues make sense for your industry. You got to do a little bit of research. You want to make sure that ideally, relationship banking helps with this, because if your personal relationship is with that institution you're trying to do stacking with, and things look stable there, it helps a lot. It helps a lot, because at least it's showing that you have legitimate personal financial activity, and there may be some patience around you having a slower business development and revenue coming in. Okay, but that aside, you want to make sure that you have projected revenues that kind of make sense based on your location and your industry. So again, if you're doing lawn care in Alabama, as my example, you want to kind of make sense of what people in that industry, in that area, might be making, because obviously lawn care in Alabama might be different than it is in California, so on and so forth. So you want to be mindful of that kind of thing, but you can totally play this game for months and potentially a couple years out on projected revenues. Just derive a legitimate projected revenue to the best of your ability that will carry over and make sense in the eyes of the bank when they're looking at it. Hopefully that's not too vague for your PNR, but you can definitely use projected revenue and income on your applications for your business to get qualified. You just want to make sure that it makes sense. When the bank is going to pull it up, they're going to cross-reference it through a lot. So you just want to catch as much of that as you can. You're not going to get every stone overturned or unturned. You know what I'm saying? Like, you're not going to turn over every stone, but you do want to do your best to be cognizant that you're not using too low or too high of numbers when you use projected revenue. But you can totally do it based on your industry and based on, your location, and just try to make it make sense. Totally doable though, PNR. Totally doable. Credit cousin, if you can't manage your personal finances, you will not manage your business finances. Amen. 100% correct. And banks feel the exact same way about that. They feel the exact same way about that. That is why personal guaranteeing is a thing the way it is, and why personal guaranteeing stays a thing until you get to a really established place with your business when it comes to business credit cards. Steven, yes, you can do business credit card stacking with credit unions. Absolutely. Absolutely. All right, PNR, I'm glad to answer your question, my guy. If you need any further details or clarification or whatever, you already know you on these lives all the time. I'll go deeper for you if you need me to on that topic. So, Steven, yes, you can do this with credit unions. It's great to do this with credit unions. Credit unions don't always have the pockets of these regional and national banks. And what I mean by that is you might not get quite those higher limits over time. But if you're just starting out, in those moderately earlier phases, and 5, 10, $15,000 on a business credit card will serve you well, you can totally do that at a credit union and stack it out across credit unions. The same thing goes for those credit unions. You want to try to get ones that are available to you in your geography. You want to get the ones you can reach nationally. If you can reach them and they will take national, people all over the country for membership. You want to check the bureaus that they're pulling from to the best of your ability and play the same game I laid out about. I really was using that for all financial institutions that offer great business credit cards. But you want to do your research on the ones that offer the 0% credit cards, of course, because credit unions, smaller ones, most of them, honestly, are not quite as popular with 0% credit cards as far as having a bunch of them available like regular private institutions are going to be. But, so do your research. They have them, of course, but they're just not quite as prominent. Like a Chase has two of them, two or three of them. Amex has two or three of them. Credit unions might not have any, or they might only have one. So you got to do a little bit more due diligence on them even offering 0% credit cards. Or because you only said business credit cards, so you might not care about the 0% part. But you just do your research on what they're offering product wise. But to answer your question, Stephen, absolutely, totally can do this business credit card stacking with credit unions and have great success for sure. And it could be a great supplement to these other larger and regional private institutions as well. So, any other questions before we wrap up the live stream? We covered a lot. Those of you catching the replay and stuck this out, I hope you were able to take notes and get some quality information. Everybody live on here, I hope you were able to get some great information out of this. I got a lot of my familiar guys in the room. I salute every single one of you taking your time out on a Friday evening to talk on such a serious level to advance ourselves going into next year. Any questions before we get out? Last time, real quick, there's a great opportunity for you guys to link up with me on a deeper level and support the channel and actually earn money and get an investment back or return back on your investment in this channel, not just merchandise or etc. Not that there's a problem with those different forms of support, but a direct way for you to support and actually get a return on your money. There's a landing page that I've linked to the top that will give you detailed information on this opportunity and just gauge your interest on that landing page. You just put your email in and select what you'd be willing to invest, and that will give me an opportunity to pull together a full campaign, and then we can get into the deeper details on numbers, etc. But this is a unique way that is coming out new, that's revolutionary, pioneering. I've linked up with a platform that is going to be facilitating this, and it is revolutionary for content creators, and for you as the audience and the viewer, because you're actually going to get to grow with the channel versus being a part of that initial foundation of that channel and that channel growing way beyond you. It happens to all of us. We've all been on those channels where we've seen them start at a few hundred subscribers or a couple thousand, and you look up, they got tens or hundreds of thousands of subscribers, big old channel, etc. And you're like, damn, it would have been nice to ride that wave going up. I'm telling you right now, that opportunity is here. If you've been on this channel any length of time, I'm only doing this part-time right now, and this channel is growing tremendously. You've seen I've gone from just filming in my office and filming on walks to literally I got a team coming together. I'm bringing you higher quality videos, etc. It's growing, and I'm not letting up on this. So your opportunity to get in on this, and actually when these revenues start to grow and share with this and share in on this, this is a tremendous opportunity for you to support somebody that's already investing in you, investing time, energy, and information in you, and for you to actually get a return on your money in the process, and not just a thank you or not just some merch. So that is pinned to the top. It will bring you to a safe landing page that will give you the opportunity to gauge your interest, Put your contact information in so we can know to reach back out to you when this campaign is fully put together. Again, I'm probably running it the last quarter through the last quarter of this year, so we got a few months. But I need your interest now. I need to know what you're thinking and your interest level right now. You can go as little as $50, as much as you're willing to put in, and get a return on your money by supporting this channel as this channel grows and expands in revenue. Link to the top of the chat. So, any last questions? PNR, my guy, you already know what we on. You already know what we on. Any questions? Anybody? Before we wrap up, we're about to wrap up. I want to make sure, as always, any questions? The opportunities to work one-to-one with me, that's also somewhere at the top of the chat. Check that out as well. I will give you a free consultation, a free overview to make sure it makes sense, that I can actually help you with what you need. And then it is affordable consulting available in the link. Very affordable. So given the information that you guys on my live, you watch my channel, you know I can directly help many people get a lot accomplished with their finances, and I am very affordable at the moment. I promise you it will not stay that way. So while my early subscribers, viewers, and pioneers, I'm just basically setting up to make this easy for y'all. If y'all need more insight than I'm able to give just on these videos, that is also at the top. Any questions before we wrap up? Last 30 seconds to a minute or so. I don't see any other questions popping up. Any additional questions before we wrap up? I appreciate every single one of y'all in the building as always. Any last questions that I can answer for you on this particular topic of stacking 0% business credit cards going into 2025? Covered quite a bit of information in here. Any additional questions that I can assist y'all with before we get out of here? I know a few of y'all are still hanging around. I appreciate y'all. Any additional questions? Check out that link at the top to support the channel and actually make a return in the process of doing so. Revolutionary opportunity. Check that out. There's a landing page, quick landing page, gives you some insight. I will be running a full launch campaign to give you more details, but you got an opportunity to get those details linked at the top. Y'all check it out. Any last questions before I get out of here on y'all? Any last questions? Appreciate every single one of y'all. Looks pretty quiet down there. Links to work with me one-to-one is at the top. Very affordable. Free consultation. The first one's free, just to get a feel for where you are and how I can help you. And then from that point on, very affordable at the moment. That link is at the top as well. Any final questions before we get out of here? All right, y'all. I'm assuming we wrapping up. I appreciate every single one of y'all. Stay focused. Stay in motion. I'll see y'all soon.